Hello, my name is Steve Bigelow with the Candlestick Forum. Markets still in a steady uptrend. As we saw today, the Dow consolidated, sold off a couple hundred points, 240, but then came back up. So what's our primary analysis? They still haven't been able to close the Dow below the T-line. However, you do have a hanging man in the overbought condition. You still want to watch to see how the pre-market futures indicate the market will be opening tomorrow. The NASDAQ also sold off pretty hard, but came right back up and closed at the top end of its trading range. But it's below the T-line in a non-performing trend. So once again, it will be very important that if they open lower and start trading lower, that means this reversal or this attempt to support the market failed, but it's still going to be drifting lower. Now, in these market conditions, we've got charts that are working very strong. Apple, for example, did a doji sandwich breakout through this resistance level, providing a good indication that this is wave one, wave two, now going into wave three with the doji sandwich breakout. The doji sandwich usually infers there's going to be more upside. However, during these market indecision stages, it's the short positions that have been working very well. So we can use the strongest candlestick signals to take advantage of going short when the market's starting to get a little bit toppy. For example, we recommended Sophie because on Friday it did a kicker signal to the downside and continued to trade lower. Remember, that bearish kicker signal shows there's a lot of force for the sellers, implying there's going to be more downside. Same scenario on our recommendation a while back on laser, because of the bearish best friend closing below the T-line and never been able to get back up above the T-line. This makes trading very simple. All you do is stay short until you see a buy signal in the oversold area, and that hasn't occurred yet. Now, the suspicion is you're getting close because look how far away you are moving from the T-line. Remember the simple rule of the T-line? You stay short until you see a buy signal, with the caveat that the further away you move from the T-line, the higher the probability you're looking at a reversal. So anytime we see these strong signals, kicker type signals to the downside, especially in something we can analyze, wave one, wave two, wave three, it just dramatically improves the probabilities that we're analyzing what investor sentiment is telling us they're still wanting to get out of this trade. So we recommended DQ today based upon the opposite of the McMuffin. The McMuffin being a MorningStar signal followed by a doji sandwich or the morning sandwich. We call this the Dagwood because there's your evening star signal followed by a bearish doji sandwich, or your evening sandwich, the Dagwood, implying there's probably going to be wave one, wave two, going into wave three. So anytime we can use the implications of candlestick signals, your evening star signal, your close below the T-line, you can stay short as long as it stays below the T-line, and it also gives you much more clarity as to where everybody might be thinking will be the target, such as the 200-day moving average. So when it gets down here after this long decline that never came back up above the T-line, you start being a little bit more diligent as far as watching for a candlestick reversal signal. So not only do the signals and patterns tell you when to get into a trade, but very simple candlestick logic keeps you out of trades that aren't going to work. We recommended MRVI on the basis it was doing a J-hook pattern after your fry pan bottom off the T-line. Had it opened positive and started trading positive today, it would have been a good buy. But the fact that just simple logic says if they open and start trading lower, they aren't confirming the pattern. It keeps you out of a bad trade. So right now, as long as the market indexes continue above the T-line with the warning that we're in the overbought area, you want to make sure that they don't sell it back below the T line, and you start watching to see what the signals are telling you. We're anticipating there's still in an uptrend, but if they start selling this off after a hanging man signal, you probably want to be taking some profits on long positions. That'll be it. We'll see you in the chat rooms.